flattish note today. With me to discuss markets, key indices and all stocks to look out for in the remainder of the week. In the studio is Suyash. Also joining us is Amit Kumar Gupta, who's the founder of FinTech Capital. Let me straight away go to my colleague Suyash sitting by. Suyash, I want to understand from you, how did the markets perform and what were the key indices that did or did not do well?
So, Shweta, it was a very volatile session for the Indian markets today. In the early part of the session, Nifty scaled a lifetime high of 66,000 for the very first time. But then we saw, some profit booking, and the markets ended on a flattish note, but with a positive bias.
Okay.
Now, at close, Sensex was up about 164 points. It touched an intraday high of 66,064 levels and an intraday low of 65,452 levels. Now, Nifty, on the other hand, ended 0.15% higher at 19,413 levels. Today, it touched an intraday high, which is also a lifetime high, of 19,567 levels and an intraday low of 19,385 levels. Now, the broader markets, which have been outperforming the headliners, underperformed benchmarks today. Nifty Mid Cap Index was down 0.81%, whereas the Nifty Small Cap Index ended 1% lower.
All right, so very volatile market out there. Nifty and Sensex both at a lifetime high, but tapering some of their gains on the back of a lot of investors perhaps booking profit. But I think one of the key major sector to look out for this week would be the IT sector, Suyash.
Yes, as we know, the earnings season are on, and IT companies are the first to come out with their quarterly results. And even the Nifty IT, which has been a laggard, in 2023 so far, it has just given returns of about 3.5% compared to Nifty 7% rise. So it was among the top gainers today. The index was up 1.75%. Among the top gainers also, there were a few constituents from the Nifty IT pack. TCS, which came out with its results yesterday, was a top gainer today. It rose about 2.47%. Infosys was another IT bellwether, which was among the top gainers in the Nifty pack. It rose about 2.39%.
All right, so IT stocks doing particularly well, also anticipating better results. But the results that have come in so far, and let me get Amit into this conversation. Amit, good afternoon. I want to understand from you the results that we've got so far, both TCS and HCL were not very promising. However, the muted expectations meant that the profit, the revenue were in line with what the industry was looking out for. Is that perhaps the reason why the stocks are doing better than expected?
Yeah, hi, thanks for having me. So yeah, you were right. Actually, the expectations were quite low from this quarter results after what happened with the US banking crisis in March. So even though the scare from that crisis is largely behind, there seems to be very high caution among a lot of IT clients that is getting reflected in the cuts of discretionary spending for most of these companies, and especially the large cap companies. So I think both TCS and HCL, they sort of had a margin dip, and both of them have, reported cuts in discretionary spending and clients not committing much until and unless the return on the investment is visible. So I think that has a reduced scope of long-term discretionary projects and project ramp downs in the near future. So I believe this condition would probably stay for at least 1 or 2 quarters more, and then only we are going to see some sort of a upside. I think if you look at the commentary, then the one common thread which I've seen is the fear of AI, what AI is actually going to do and how it's going to impact the project ramp up going forward. That will be very critical to know, because it will not only impact the client side investments, it will also impact how many people you want to hire. So there are a lot of ifs and buts of how the artificial intelligence is going to impact the IT sector. And I see a lot of caution, from the IT companies in these two results.
All right, and the inflation numbers that also came in from the US, particularly hinting at better expectations in the upcoming months as far as FOMC is concerned. We will have to, of course, wait and watch out for whether there's going to be a pause or a cut, if at all that's possible. Amit, what are your expectations?
So I think the rate cut expectations are, off the table for at least this calendar year. Uh, as far as India is concerned, I think the recent food inflation, which is reflected in the last yesterday's yesterday's inflation number for India, that is not going to cool off very quickly. So I think the prices of certain vegetables which are high, I don't see them going down for the
Right.
next couple of months. So I think that is off the table. As far as US is concerned, my sense is that there were a couple of prices which were very high on a year to year basis, like used car prices. So that has gone down, and that's why the headline number is also taken a dip. But having said that, interest rates are still at, the bond yields in US are at still at 4%, and there is a very high chance that we are also going to get a rate hike by the end of this month from the FOMC. So I would, hold my horses for rate cuts at least in this calendar year.
Okay.
Probably early next financial year, we are going to see some rate cuts.
All right. And by when do you see the discretionary spending going up in the US?
So I think the discretionary spending at this point of time is not so much of a concern, but that is all leveraged, leverage consumption, which is happening through credit cards and through short-term loans. So my sense is that, until unless there is some major, crisis happening in US, which will impact the markets, don't see it, really falling off the cliff, but it can definitely slow down because with the 2% growth and 4% inflation, that will be sort of a recession-like conditions in the US. So my sense is it may not drop off very significantly, but it can slow down a little bit before picking up again with the rate cuts happening next year.
All right, and before we move on, I want to quickly also understand how gaming stocks are doing, because that's an important story that we continue to track here on Newsline. The impact of the 28% GST levy on gaming stocks, and we were tracking, the dip that Nazara stock has taken. What is the outlook looking like for gaming stocks?
So, Shweta, like the gaming stocks continued to fall on the back of the July 12th report that came out, that GST Council is looking to levy 28% tax on online gaming. So Delta Corp, which fell about 23% yesterday, was down another 5 to 6% today. Nazara Technologies, which was down about 2% yesterday, declined another 3% today. Zensar Technologies, which surprisingly was an outlier yesterday, it rose about 2%, continued to post decent gains in today's session. It was up about 3%. On Mobile, which is a fourth listed player in the online gaming space, which was down about 1.3% yesterday, was down about 3% today as well.
All right. All right, so that of course is the big news coming in from the gaming industry, and we continue to track all the stocks and stock related news. I suppose you had a question for Amit before we move on from stocks.
So Amit, actually I wanted to come back to the IT sector. I mean, if you look at TCS's strong order book, it remains at about 10.2 billion, and even though HCL as well, like it said that the order book fell to a 12 quarter low. It is optimistic about the demand picking up over the subsequent quarters. So is the slowdown in the IT sector a transient phase, or and how does it look in the long term?
So I think in a short term, the outlook is a little hazy, and at least I would say for both June quarter and September quarter, it's hazy. The main reason is that the BFSI sector, the banking, financial services, and insurance sectors forms almost 30 to 40% of the revenues of major large cap IT companies. Along with retail, if you include the retail sector also, then it's more than 50%. And all of these sectors are actually soft at this point of time. Some of the sectors like life sciences, healthcare, manufacturing, that is showing some resilience. But the majority of the sectors are, sort of a little soft and the expectation is that they are going to remain soft for the next quarter as well. So my sense is that we don't want to extrapolate this slowdown too far in the future. These are, strong companies and usually have come back after every down cycle. But the normalization is not expected for at least next couple of quarters till this situation about high interest rates in US and bottom end getting crushed in the IT sector. That phase is not over. Then we can have a look at IT sector
All right.
again.
All right. So high interest rate regime in the US is going to keep impacting, or is likely to continue impacting IT stocks in India. We will of course come back to that story. Shifting focus now. Prime Minister Modi's visit to France will be a significant milestone in the bilateral relationship between two countries, France and India. While defense cooperation between India and France will be the key focus of the two-day visit, both countries are expected to strengthen their ties in digital economy, manufacturing and clean energy. Now, as per media reports, India and France are also scheduled to discuss the possible launch of digital payments technology, or UPI, the Indian UPI, Unified Payments Interface in France. The deal is expected to be along the lines of India-Singapore fast payment linkage. Now, in 2023, India's UPI and Singapore's PayNow signed an agreement allowing users in either country to make cross-border transaction. The UPI PayNow integration allows users to quickly make payments, send money abroad between the two countries, and that could similarly be made possible now between India and France. Remember, UPI is hugely popular, continue to grow in popularity. Its monthly volumes exceeded 9 billion transactions. I'm talking about volume for the month of May 2023. All that augurs really well for India's digital economy. Joining me at this point in time in the studio is my colleague. Also, Amit continues to be with us. Krishna, I want to first begin with you. This is the story of India's digital economy growth. This is the story of the growth of India's public infrastructure, digital public infrastructure. And the UPI success story has in a way signaled to the rest of the world that India is growing as far as digital payments is concerned. And in this case particularly, after signing a deal with Singapore, France could be the first European country which would sign perhaps a UPI agreement, which means both French people and Indian people can transfer money abroad seamlessly.
Right, and that's because we've already done this within Southeast Asia with Singapore, as you've already told us about. Like you rightly mentioned, we saw India managed to strike a deal with Singapore where cross-border UPI payments could be made between India and Singapore, and now cross-border payments can be made between India and France. First European country, hopefully the beginning of more good things to come. Imagine if us being able to use, so many Indians travel to London all the time, so many have friends and relatives and work over there. So imagine us being able to do this in London, us being able to do this in other big cities across the world, including New York and other cities. So I mean, already we have seen the RuPay card, the RuPay entity getting traction abroad as well. So all of this means that these kind of linkages basically mean that it is the Indian model that it could eventually see getting replicated everywhere across the world, because this is talking about 9 billion transactions in just the month of May on UPI in India. That's been the kind of success that UPI has been. But however, across the world, especially in Europe, people haven't taken to paying online digital payments as much as Indians have, because even when you go on holidays right now in Europe, Shweta, you have to use your cash. You have to keep a portion of the money that you spend over there in cash, and then the rest of it is in card. Very few of them, where you can take your phone and scan a QR code and pay for it, or take a number down and pay for it. And a lot of that is happening in India and China to a very large extent. I mean, to give it to them, in fact, they did before us. But the growth in India has been absolutely phenomenal. And as you're rightly pointing out, the digital public infrastructure being built so that Indians can transact freely, safely, and quickly online, has been nothing short of a wonder story. And you're seeing that story being taken to the next level. If Indians living in India and Indians living abroad, can transact in the same platform. The kind of linkages that can provide, the benefits that can accrue because of that I know it's very difficult to assess them at this stage. But I think it will truly take, India and Indians' ability to transact in money online to another level.
All right, and what we know at this point in time, and I'll get quickly Amit to discuss this further. NPCI, the company that runs UPI in France, is Lyra, Lyra, is working, and this has been in the works for at least a year now. And since Prime Minister Modi is all set to touch base in France, Modi would be opening up, or rather inaugurating, the linkage between the two countries, the economic linkage which would be essentially beneficial to French people in India and Indians who go out, travel abroad, live abroad or work abroad, specifically in France or other parts of the European Union. All in all, I think this is a start of an economic relationship with France, Amit.
Yes, I would say so. I mean, this deal has been in the works from NPCI for quite some time, and if it is, announced during this PM Modi's France visit, then I think it's going to be the first arrangement in a European country. We do have countries who have adopted a UPI system, whether it is Bhutan or Nepal or UAE. Singapore was the first country where we had this kind of transaction. And as Krishna also pointed out, this will open up more European countries to adopt UPI eventually. I mean, UPI is now big, as per some RBI data, I think the 73% of all the non-cash transactions in India are now happening through UPI. And this is, about going to increase in the next few years. There was a report by, I think, PwC, which said that the daily transactions are expected to reach about 1 billion by FY27, so accounting for almost 90% of all the non-cash transactions. Having these kind of economic relations with other European countries, and given the fact, that so many of our companies have operations there or have joint ventures there, and tourism again, is big in European countries. I think this is a good start for UPI. For NPCI, and this is going to prosper both ways going forward.
All right. Of course, a start of a new economic relationship, a relationship that is based on India's public digital infrastructure and leveraging the technology that both the countries possess. This has been in the works for a while, but quickly to Krishna before we move on from this very important discussion. UPI's story is also a story of India's growth and success at a time when, we or previous governments, and I'm not naming a certain government, it doesn't matter to us, but at a time when previous governments in the country could not have envisioned the growth of digital economy to a point where by 2026, 90% of all digital transactions will be done through UPI. UPI is becoming a game changer for everybody, from a local vendor to a kirana store to us who are traveling on a constant basis. This is also a story of aspirational India. Krishna, if you come to think of it, because we were of the view that in a country where people cannot afford smartphones, how will they be able to transact digitally? But not only can we afford a smartphone, we're also transacting digitally in ways that was unfathomable years ago.
And still unfathomable for many parts of the world. The world is now looking at India and looking at the rate of adoption of digital payments, and that is only rivaled by that of China. No country, no Western nation, be it America or Europe or for the matter Australia, we've seen where people in these countries have taken to transacting online, making payments online without fear, without worrying about their money getting wiped out, their entire money in their bank accounts getting wiped out one fine day. That's the fear that they have, or whether they haven't been able to overcome that fear. But whereas India and Indians, have been able, first of all, they've been provided with a platform where they could trust that platform, and also the fact that all the linkages you've seen with UPI, like UPI, taking into its ambit Google Pay, Phone Pay, Paytm, everything coming into the ambit of the UPI. The way this platform has evolved and just brought about everything out of the ambit has just done away with wallets. Before UPI wallet was the name of the game, you had so many companies launching newer wallets. Companies are still launching wallets. But the question on wallets have now come about. Why do you need a wallet when you can do UPI? So UPI, in the true sense of the term, has been that game changer when it comes to digital payments within India. And now it is looking to be a game changer when it comes to sending and receiving money outside of the borders of India. So so this is the level 2 or phase 2 of UPI, and aspirationally speaking, if Indians aspired for an easier way of doing things in which they can conduct their daily lives, they've gotten that aspiration. I think it's now asking Indians to aspire for more. Expect UPI not just where you are when you are at home, but also expect UPI wherever you go. So that is the aspiration right now, Shweta.
Right, a story of aspirational India, a story of growing demand for digital public goods in India, digital public infrastructure in India. UPI continues to be a success story. We're given to understand it will soon record 1 billion in transaction, and we're talking about volume of transaction. Will record 1 billion transactions per day by financial year 26 and 27, going from 83 billion transactions in 22-23. So 83 billion transaction in the entire year to 1 billion transaction per day. It's going to be a huge success story. We will of course keep tracking those details. But shifting focus now, if you are a credit card user, this is for you. Axis Bank has devalued 5 of its credit cards, which will now offer reduced benefits. We are talking about Axis Bank Privilege, Reserve, Select, Flipkart and Axis Bank MyZone credit cards. The devaluation comes into effect from 12th to 14th of August. So you still have 1 more month to go before you continue to enjoy the rewards, the benefits of having one of these credit cards. Remember, the rewards have not been taken away entirely. They've just been devalued. We'll discuss details of that. Remember, earlier HDFC too had revised its rewards program at the start of the year. Now, credit card usage has surged to a record high, but what is driving is not consumption, but the reward points and freebies that are associated with the card spending. Average monthly spending through credit card has doubled in 3 years, from 16,000 crore in a month in financial year 19 and 20 to 1.2 lakh crore in financial year 20 to 23. Now, this is according to RBI data, but essentially goes on to suggest that credit card usage is only getting bigger and better, and it's happening on the back of freebies and rewards that are given out by credit cards. Let's talk more on this. Krishna, what we are given to understand that this has been a chatter on social media, and I picked up this chatter, I remember about 2 to 3 days ago, some users saying, they're giving hefty rewards. This is not feasible, this is not sustainable, will be taken away, and that is what has happened. Although there is some more clarity that we need from Axis Bank at this point in time. Some people have been sent out emails. Axis Bank hasn't really come out on record. We'll put that statement out as and when we get it, but some people have been sent out emails intimating them of the changes with respect to reward points. Some of these reward points, the ratios have been sort of changed, not entirely taken away.
Right. So that reward points you're talking about, the way the Magnus credit card from Axis Bank worked was that if you spend more than 1 lakh rupees or 100,000 rupees on that credit card, you get reward points, 25,000 reward points, which apparently translates to 20,000 rupees worth of flight bookings. Now, that basically means is that you spend 1 lakh rupees on that Axis Bank credit card, Shweta, you're getting 20,000 rupees, which means like you're basically getting a return ticket for yourself to Goa. Every single time you spend 1 lakh rupees. That's beautiful, isn't it? You first of all you keep spending and you keep getting something back. So clearly, as you the ratio, the mathematics of it all it wasn't sounding plausible right from the beginning. And you're right, there was a lot of social media chatter about the fact that these things seem too hefty. How is it going to be possible? So hence that ratio, which was 5:4, is now going to be brought down to 5:1. So it's going to be a 2 to 3 times reduction of the kind of rewards that were being offered at one point in time. And the problem here is that clearly the credit card departments of all banks have been breaking their heads, over how to get more customers to spend, especially at a time when job losses are so common, when the job market is really bad. How do you make people have the confidence to own a credit card? And all these factors helped people believe that when you get a credit card you're spending for a reason, whereas there is never a reason to spend unless otherwise you actually need something. So in that sense,
but it's easier said than done, because a lot of us end up buying products or purchases which are way beyond our capacity to buy, which is where credit cards come into picture.
Right.
You want to buy a smartphone, you don't have 1 lakh rupee in your account, you may have 50,000. This is where a credit card comes in. So again, I suppose, and this is my understanding of it, I think this is the downside of aspirations. You want to buy too much, but you don't have it with you. So
that is always
go for credit
aspiration
cards.
is always going for something that you don't
but
have.
That results in more debt as well.
Yeah, but the idea is to keep your aspirations going, and the idea is always balance, Shweta, isn't it? It's like saying that don't have ambition, because ambition means you're going to make a sacrifice that you're going to regret for the rest of your life.
Right.
I don't think you should look at ambition that way.
Absolutely not.
Same way aspiration works the same way. You are supposed to you can get credit cards, and it might sound like antithetic to Indian culture, which is based on small savings all the time. And they're saying that India was able to ride through most of the crisis during a post-pandemic because Indians have this ability of small savings. But the fact of the matter is that when it comes to things like credit rating and etc., and the fact that cash has been difficult to come by, and with only expenses only going up, because soon we'll be talking about how expenses of everything, including vegetables, are going up, are shooting up. So clearly money is tight, and any kind of aspiration, leaves you wanting for more. And that's where the credit card comes in. But the question is, have the credit card companies, have these financial institutions which have been issuing these credit card companies thought about it? I make this equation, Shweta, to politicians and their Labharti schemes. Are you sure you've got the finances of your state sorted out before you tell people that I'm going to give you so much free rice and so much free television sets and so many freebies that I'm going to give you? So you make the announcement, win the election, then you come back and say, actually we don't have the cash to do this. That's what happens with a lot of politicians and their freebie plans. And that's what seemingly I would apply that analogy to what has happened to these credit card companies, where they said that it's all about getting as many customers on board, get customers on board, and then be like, okay, wait a second, actually, we can't give you this much. And everybody is like, heck, it was this much, that's the reason why I got the credit card in the first place.
Right. I think this only encourages, and I'm also picking up from a lot of people what they're writing on various social media platforms, including LinkedIn, Twitter, that it makes all the more sense, therefore, to have more credit cards, so that, once you've utilized all the benefits on one credit card, you switch to other, and then you switch to other. My concern with that is that leads to a whole lot of debt. That leads to a debt crisis.
That's why I say you should never follow everything on social media. You have to pick and choose and be very careful about the kind of comments that are going on. Yes, in a situation like this, it seems as if, okay, if you're going to reduce the number of benefits on one credit card, then I'm going to get 5 of those credit cards and get 5 of those benefits. Look, I think there will be some sanity and rationalization that I hope is born out of all of this. Here, hold on a second, take a moment, take a breather, and understand what is going on right now. You bought a credit card, that credit card with a bunch of benefits that were listed that were completely attractive to you, and then now the company that issued the credit card turns around and tells you, you know what, I'm going to give you all of it, I'm going to give you at best 1/4 of it. Would you buy any product? Would you even trust the institution that gave you that product in the first place? That product being the credit card. So at this stage, I think the financial institutions and the banks which are issuing credit cards will have to find ways to make sure that the trust factor is not dented, and people are able to have a fair understanding of what they're getting into when they go for a credit card. That's one thing. And as far as the customers are concerned, the logic is always simple: never get more than what you need. At best you can get one for your wants. So I would say I can't give a specific number on the number of credit cards that people should be having. I'm not a registered financial advisor to tell people how many credit cards that people should be having. But But the point is that have only that much that you know that you will be able to service very well.
Absolutely.
You will be able to pay your bills on time, and you will be able to maintain a good credit score, because here's what's going to happen. If you get all those credit cards and you keep defaulting on those payments, your credit score is going to go really bad. So hence, you want to keep up a good look of your credit score. So keep that in mind when you get a credit card. To make your credit score look good for future application for loans and credit cards, if you can have 1 or 2 credit cards and make sure you use them properly, pay back the bills in time properly, then you look good, your financial history looks good. So think of that before you go in for a credit card.
Thanks for that advice, Krishna. But let me quickly, for the benefit of those watching or tuning in now, Axis Bank has devalued Axis Bank Privilege, Axis Bank Reserve, Axis Bank Select, Axis Bank Flipkart and Axis Bank MyZone credit cards. The devaluation comes into effect from August 12th to August 14. Now, it's not clear whether Magnus credit card has also been devalued or not. So what goes away? The bank is discontinuing the earlier annual benefit of 3,000 Edge reward points, which accrued on achieving a spending milestone of 2.5 lakh rupees in previous anniversary year. The rest of the conditions remain same. The conversion of reward points to partner points too has been made less attractive. So you may want to go back and read some of those figures out there on your Axis Bank application. See what benefits you were accruing up until now and what changes after August 14. But shifting focus for now, a tomato crisis is brewing in India as prices have now skyrocketed and have been hiked by as much as 300% due to extreme weather conditions. The tomato prices surged 341% year to date. It was at 24.68 rupee per kg at the start of the year. It's currently valued at 108.92 rupees per kg as per data from the Department of Consumer Affairs. And this is government data, but the sabzi mandis are selling tomato at an upward of 200 to 300 rupees per kg. Not just tomatoes, prices of other vegetables have also shot up. Fruits have been made more expensive by 10 to 30%. These are testing times for people who are trying to manage a budget and also trying to manage their kitchen. People have got to manage their food bills, pay for their daily expenses, and also ensure that they're getting a healthy nutritional diet. Krishna, all in all, I think it's the general public that is going to take a beating. People who are hoping to continue to buy veggies are suffering, and suffering a great deal. All of this comes on the back of the fact that excessive rainfall in areas which were particularly harvesting pulses, vegetables and fruits have not been able to do so. Some of them perished because they were not supplied on time due to the cut in supply chain because of rainfall. Others because there was some sort of problems that they couldn't cater to. The crop had some sort of leak that it couldn't cater to. So all in all, it's the people in general who are suffering because prices of vegetables have shot through the roof.
Right, the tomatoes are right now costing more than some gourmet Italian cheese like burratas. That's how our mascarpone is. Tomatoes, your tomato now is more expensive. Our friendly tomato, which used to be a very friendly tomato, now costs more than gourmet Italian cheese. A box of crema
I like when you say tomato.
So because
that makes it more real.
Because I used all the other fancy words like burrata and mascarpone and all these names of Italian cheeses. They are $300 for a 350 gram in a box, and this is $300 for a kilogram. It's absolutely. We were talking about a week ago, Shweta, about tomatoes costing more than a kilo of chicken. And now I don't know which meat it's crossing right now at this stage. And one key factor that people should remember is that, bear in mind, we are already coming on the back of a low sowing season for tomatoes this time around. Many farmers in Karnataka, specifically speaking, in Kolar region, did not sow tomatoes this time around because they found other lucrative vegetable crops like beans, which went for a higher price last year. And they saw that and they're like, might as well take advantage of that, and they sowed beans instead of tomatoes. So like that, many farmers did not sow tomatoes this time around in the first place. Add to that all the things that you mentioned, the crops being destroyed. There are delayed monsoons. The monsoons are playing havoc in different ways. In certain places there are deluges. As we speak, there's a delusion. There's absolute devastation in Himachal Pradesh and Uttarakhand and Delhi. And then there is monsoons not arriving, not in enough quantities and at the right time time in certain other parts of India. So it's been absolute monsoon havoc that is played through it with the vegetables. And another important factor is that tomatoes, unlike say onions and potatoes, tend to spoil faster, tend to damage faster. So as a crop, it becomes that much more difficult to control tomato prices. But now that the government is stepping in, we here at News 9 have been talking about it right from the beginning, Shweta, when prices cost 100 rupees per kilogram. That's when we first raised the alarm bells here on News 9. If viewers watching this broadcast should go back and check that show that we did on the day that tomato prices crossed 100 rupees per kilogram in India. And here you go, less than 2 weeks from that, you have prices crossing 200 kilograms, 300 rupees for 300,
Two to
three
three
times that.
and that's also on the back of the fact that people are hoarding big time, and what is coming out latest is that government has finally intervened. They are going to procure tomatoes from Maharashtra, Karnataka and various other tomato producing region and bring it to Delhi NCR, perhaps lower down the prices, and the move could lower down the prices by Friday. So some sort of relief that government could provide to people in northern states, non-tomato producing states, and by procuring. So some steps being taken there, although a little late, but could be some relief.
Well, I think there was some disbelief in the beginning, Shweta. Like you're talking about, that argument of hoarding happening was overplayed in the beginning. I think everybody thought this whole tomato prices going above 100 rupees was a matter of hoarding, was a bunch of private suppliers, them cartelizing, and then that's the reason why all you have to do is figure out who's hoarding, and then you'll get all the tomatoes. Looks like it's far beyond that. It's far beyond just hoarding. And obviously now, if you are a tomato trader, obviously you'll hoard because because you never know how prices are going to go. If you hoarded tomatoes last week, a few days ago, and the prices would have been up by another 20 to 30 rupees per kilogram in a day or two, and you can sell it for a huge delta. So hoarding is going to take place right now because you heard stories of how some tomato vendors have bouncers at their stores. They're fending people off to make sure nothing happens to their tomatoes. There is security provided to tomato carrying trucks, so that these days it's like a bank robbery if you rob a truck carrying tomatoes. That's how that's where things have gotten over here. So it's absolutely essential that the government steps into it, and it's great to know that the government has stepped into it. And as you're rightly pointing out, things are moving and moving fast. We are in Thursday. In about 24 hours from now is when we're expecting stocks procured by the government to arrive in the mandis of Delhi NCR, and hopefully post that we'll see some I don't know, I don't want to say sanity, because I think we are way beyond sanity as well when it comes to tomato prices. I really hope, we are at least on our path back to normalcy. When it comes to tomato prices and vegetable prices, because let's face it, it's not just tomatoes. The veracity of it is felt most in tomatoes, but the prices of all vegetables are up at this stage, by quite a margin.
Right, and remember, southern and western regions of India are the tomato producing states. About 56 to 58% of the tomato crop comes from the excess of southern and western regions to the north of India, which is currently inundated. All in all, tomato prices could get some relief in northern India as the government starts bringing tomatoes from west, from south, and provide them at a discounted price. This is what the press release released by the government says, that we will be providing these tomatoes at a discounted rate in various places in Delhi NCR region. So some relief there for people. But as far as prices of other vegetables is concerned, Krishna, that continues to take a beating, and this is largely on the back of the fact that unseasonal, or rather seasonal rainfall, I think this is seasonal rainfall now, but the excess of seasonal rainfall has caused havoc.
Right.
In parts, exactly. I mean, look at those rates. Ladyfinger, beta gourd, bottle gourd, all of them are upward of 50, 60, 80 rupees. Ginger,
and they sound better.
Flower.
They sound better when you discuss tomato prices. They sound better, but they're not. They're actually quite. Look at that. Call it for
ginger is 240 rupees per kg.
Yeah, that's another problem. That's a huge problem. There's clearly, again, there's a supply issue over there. There's a supply issue because that is ginger is if you make ginger chicken.
Forget the chicken. I want ginger tea.
No, I know. If you make ginger
That
chicken,
requires way less ginger.
Shweta, I know you love your chicken. Think about ginger chicken. How much does a kilo of ginger chicken cost roughly?
A kilo would be approximately 300 to 400 rupees.
Yeah,
Yes.
so ginger is just right up there. If you make ginger chicken, the cost of the ginger and the chicken is equal right now. That's where things
So
are now.
your chicken is better off without your ginger.
Without the ginger, for
Right.
God's sakes, find another spice. That's where things are right now. And cauliflower, look at cauliflower price, 180. There is an issue this time around. This is, yes, of course, this is not like it's not like ginger is going to trade at 240 for the rest of the year. But if you don't do something right now, there needs to be, because these are not prices which people who are closer to the poverty level can deal with for very long. I mean, it's okay. It's all fun and games. People say, as like us in the studio, Shweta, we're fairly well-to-do middle-class people in that sense.
And we can afford.
And we can afford the odd spike in rates and continue going about it. Maybe have a little less tomatoes for the next few months, and whatever. But because we can find other substitutes. There are so many people who can't find substitutes for onion, potatoes, and tomatoes and cauliflowers. And ginger.
These are basic vegetables.
And ginger. You're talking about ginger tea. I mean, look at a cutting ginger tea outside is going to cost you 7 rupees a cutting or a 10 rupees a cutting. Imagine the cost of ginger that's going to go. What's going to happen? You're going to charge a ginger tea at 50 bucks. You can't. So, and the amount of ginger that's needed to make 2 cups of tea.
Right.
So, I'm really concerned about people closer to the poverty level, the lower middle class, the huge lower middle class of India, who cannot keep up with these kind of prices. And also, restaurants, the small restaurants, the smaller businesses, they will not, who procure, who know your dhabas, who have to buy tomatoes and onions and cauliflowers on a daily basis. How are they going to keep up with these?
These figures are far lesser than what it's actually available in the market.
Yeah.
It says in Shimla it's available for 110 rupees. That's the modal price. But in the real mandi,
Yeah.
and which is where you expect people to make profits, this is available at an upward of approximately 160 rupees a kg.
Yeah. So I mean, look, you're talking about Shimla. I'm guessing Shimla far more closer to the fields as possible, and then and there if it is 100. Let's remember where this thing began. It's supposed to be around 30, 40, 50 rupees a kilogram is where you're looking at 60 rupees a kilogram. Okay. Take me further. 70, 80 rupees a kilogram.
You've sold it to me,
That's
Krishna.
as far as I can go to. What is 100? And that's too in Shimla? 110 rupees in Shimla? That's incredible. And I'm talking the 60, 70, 80 rupees from our fancy apps that we buy in these big cities from. From where we don't have the time to go to a wholesale market and just buy it from the nearest by retailer, and he's going to charge a premium for bringing it closer to your doorstep, and we're okay paying that. Even with that, it's 60, 70 rupees, Shweta. What is 300? It is. I can't believe we're even having this discussion right now. And good that in fact, you're giving me some good news in telling me that the government is now officially stepping into the matter. McDonald's burgers don't have tomatoes, Shweta. That's where we are right now. So before tomatoes go off the menu across the board, I think, and also before it starts hurting the most economically weakest sections of our society, I think it's time for a fix. It's time for things to be brought back on the path of normalcy.
Absolutely, and before I let you go, I think it's also important to touch upon the impact of these rising prices on economy at large.
Yeah.
Now, in June, headline inflation has come in at an upward of 4%,
Right.
which is not good. It's above the RBI's tolerance limit. In July, we are in July, and this is where prices are soaring. They are at an all-time high. So I'm expecting when the July number comes in, and it'll come in next month,
Right.
this is not going to augur very well for the government. Headline inflation, of course, is going to be way larger on the back of the fact, and there are other factors that go into it, but on the back of the prices of food items, pulses, fruits, vegetables, it is likely to go up. So important measures therefore the government needs to take now. We are in the middle of July, and rainfall has already inundated large parts of north. There is a flood alert here in Delhi. We're sitting right next to Yamuna. There is a flood alert here. So my concerns are only exacerbated by what's happening as far as the climatic conditions is concerned.
Yeah, the thing is, right now, there are two problems for the government. One is this unexpected food inflation rise, and the other is the expected oil price or the crude oil price rise, because the days of cheap discounted oil from Russia is going to be over. Bear in mind, India has been procuring oil from Russia ever since the war with Ukraine began at a discount of around $20 a barrel of crude oil. And now that discount is now as low as $4 a barrel, which means that we've been having a good time with the lesser crude oil price that we've been procuring from Russia. So food inflation and the other big inflation driver, oil. Those two things. I wonder how the government is going to strike a balance between these two going forward, Shweta.
All right. So, of course, measures need to be taken to tame pulses, prices of food items, prices of vegetables that are at an all-time high, for as basic as a ginger to a cauliflower to onions to tomatoes. For a common man, it takes a beating on their pockets, it takes a beating on their budget, and for people who are still below poverty line, they are unable to afford 2 square meals a day. And all of that, of course, has a larger impact on India's ability to uplift poor people and to provide them with housing, sanitation, and most essential of all, food at the end of the day. We will, of course, keep tracking all those details, but that's all we have on this bulletin. Thanks very much for watching.
With all this gear, you must be wondering if I'm climbing a mountain. Well, let me give you a wider look of this place. This is Asia's largest mountain of shame.
A mountain of waste, almost the height of the Qutub Minar.
When you enter capital cities of some of the biggest countries in the world, you don't have 3 garbage mountains waiting to welcome you.